Shares of Fitbit soaring in its initial debut. I'm here with the company's Chief Financial Officer, Bill Zerella. Bill, good to see you and congratulations.
Thank you very much.
So, in the first couple hours of trading, your stock is up about 50% from the offer price, which was raised. So investors are going to want to know, can your earnings growth keep up now with an even higher valuation?
Yeah, well, so far we've just been able to really execute flawlessly financially. I mean, we're one of the few companies that has combined rapid growth with really strong operating margins, and we're going to do our best to obviously continue that in the future.
You're one of the few tech companies who actually went public, profitable on a non-GAAP basis. Most tech companies do not do that. How were you able to?
We just have a lot of financial discipline in terms of the way we manage the business. We're very conservative. We're really focused on hitting target gross margins while delivering value to our users. And we've just been very capital efficient and very focused on not just driving revenue, but also profitability.
So you've had very strong growth. You sold almost 11 million Fitbits last year. For how much longer will you exceed the NBD estimates?
Yeah, good question. I mean, if you really look at our core mission, it's about health and fitness, helping people be healthier and more active. And that market opportunity is huge. There's over 200 billion of annual spend in health and fitness. And frankly, we look at our revenue today, while it's been great and the growth has been phenomenal, there's a big opportunity out there.
Of course, other people have discovered this giant market too. And in your prospectus, you mentioned the potential for competition now and in the future from Apple, the Apple Watch, Google, Samsung, just a few other companies that you mentioned, Microsoft's another one. So yes, it's a big market, but there might be new people competing with you. How are you going to stay in front of that?
Yeah, a few ways. So we are very focused in our mission, which means all of our development, all of our management time is focused on delivering world-class products and services to consumers. And again, we've really been able to execute to a point that we effectively are the market. We have about 85% share in fitness trackers today. And it relates a lot to the variety of products that we offer. We sell products from $60 up to $250. They're all cross-platform. It doesn't make a difference what kind of phone you have. And we've been really the innovators in the market and have been able to deliver really compelling technology.
And are you concerned with increased competition, even if you are winning favor, that you might face some margin pressure if the lower end becomes more popular?
So, when you're in the early stages of a developing market, and that I think is the case here, then really the biggest issue is creating more consumer awareness. And when companies like Apple, for example, enter the market, first we think the market is big enough to support more than one company. Second, we think increased awareness by consumers, if anything, kind of gives us an opportunity to continue to grow rapidly.
And what are your kind of long-term growth projections for the market overall? I guess what I'm trying to get to is, how do we make sure it's not a fad?
Yeah. Well, I think we've already proven it's not a fad. We're selling our products in 54 countries around the world. And it's kind of broad engagement across all demographics of consumers. If you look at the NPD data and if you look at some other industry analyst projections, the projection is about 6x growth over the next 4 or 5 years. So I think we're just starting in terms of the opportunity here.
One negative is you have some lawsuits against you from Jawbone. I'm sure you can't talk about specifics, but I'm wondering about potential financial implications on the legal cost side of those lawsuits.
Yeah, I mean, we don't think they're going to be material at this point from what we can assess. I mean, frankly, as the market share leader, we really have no need to steal anybody else's technology or trade secrets. Everything that we've developed internally is backed by a lot of patents. So we believe these lawsuits are really without any merit whatsoever.
And finally, with increased competition, do you think you're going to have to spend more on product development?
Yes, actually we do, and in fact, if you look at our projections, we've been historically doubling our R&D spend. This year we're looking to triple it to roughly $150 million, and that's focused R&D on all the kinds of things that we're focused on in terms of health and fitness.
Bill Zerella, thanks so much for your time.
Thank you.
I'm Rhonda Schaffler for TheStreet.